In November of 2021, Bitcoin soared to a record high of $69,000, marking a significant milestone in its volatile journey. The big question on everyone's mind is, when will Bitcoin return to that lofty mark again? Predicting the short-term fluctuation of Bitcoin's price is akin to navigating through a maze blindfolded. It's challenging. However, if I were to hazard a guess, I'd say we might witness something reminiscent of that figure before the year draws to a close. Now let's delve into the intriguing dynamics propelling Bitcoin towards the coveted $100,000 mark. With the much anticipated halving event just around the corner, approximately 60 days away, coupled with the relentless appetite of ETFs gobbling up available Bitcoin supplies, it's a potent cocktail of factors stirring the pot. Historically, the halving event has proven to be a pivotal moment in Bitcoin's trajectory. Following the previous 3 halvings within 18 months, Bitcoin has surged to new all-time highs. However, what's unprecedented this time around is the backdrop against which this event is unfolding. The approval of ETFs has injected a fresh wave of momentum into Bitcoin's price action. We've witnessed a remarkable climb from $42,000 to $52,000 following the approval of these ETFs. If this bullish trend persists, we might find ourselves on the brink of revisiting those historic highs. Whether we'll breach the all-time high remains uncertain, but the possibility looms tantalizingly close. Meanwhile, Ethereum, often touted as Bitcoin's ambitious sibling, is inching towards the $3,000 mark. Despite this progress, it still languishes at 38% below its peak value. Against this backdrop, the spotlight shifts to Gary Gensler, who found himself compelled to greenlight a Bitcoin ETF. The burning question arises, will he extend the same courtesy to Ethereum by approving a spot Ether ETF? Speculating on Gensler's next move is akin to deciphering cryptic ruins. However, it seems improbable that he'll replicate the Bitcoin ETF approval for Ethereum in the upcoming window in Q2 of this year. The regulatory landscape surrounding Ethereum remains murky, and Gensler's stance might err on the side of caution this time around. It's fascinating to contemplate the evolving landscape of cryptocurrency and its potential journey towards mainstream acceptance. In many ways, the trajectory seems reminiscent of the early days of the internet when people were just beginning to wrap their heads around the concept of internet companies. Fast forward today, and discussing companies without referencing their online presence is almost unthinkable. Similarly, I believe we're witnessing a similar transformation with cryptocurrencies. What was once considered a niche or obscure corner of finance is gradually seeping into the mainstream consciousness. The recent approval of Bitcoin and the contemplation of Ether ETFs mark significant milestones in this journey. However, as people point out, the crypto space is not limited to just Bitcoin and Ether. There's a plethora of assets like Solana and Dogecoin, each with its own unique appeal and investor interest. This begs the question, how many ETFs could potentially flood the market? If we look back to history, before the Bitcoin ETFs came into existence, there were reportedly around 5,535 ETF launches. This staggering number underscores the potential for a multitude of ETFs catering to various cryptocurrencies. Just like with traditional assets where you have multiple ETFs tracking the same underlying asset but with different strategies, think SPY, leveraged SPY, inverse SPY, and so forth, we could see a similar proliferation in the crypto space. This raises intriguing prospects for assets beyond Bitcoin and Ether. Injective, Ethereum Layer 2 solutions, and even XRP come into the spotlight. The possibility of an XRP ETF, for instance, sparks curiosity. The CEO of Ripple could shed light on the latest developments, potentially offering insights into when regulatory uncertainties might dissipate. However, navigating the regulatory landscape, especially with ongoing battles against regulatory bodies like the SEC, remains a significant challenge. It's a delicate balancing act between innovation and compliance. While the journey towards regulatory clarity may be arduous, it's crucial for the long-term sustainability and legitimacy of the crypto industry. Navigating the legal landscape, especially when it involves regulatory bodies like the SEC, can feel like tiptoeing through a minefield. The uncertainty of whether disputes will escalate to higher courts keeps everyone on edge. Reflecting on past encounters with the SEC, it's evident that victories have been hard-won. Despite consistent wins, the possibility of the SEC appealing and escalating matters looms over us like a dark cloud. The recent denial of the SEC's request for an interlocutory appeal offers a glimmer of hope, signaling a potential roadblock in their pursuit of further legal action. Observing the unfolding drama in the Coinbase case, where the judge seems to be skeptical on the SEC's arguments, adds another layer of intrigue. It feels like a game of chess, with each move scrutinized and strategized. However, the tide could turn if Congress steps in and crafts new legislation altering the regulatory landscape entirely. It's a waiting game where patience is both a virtue and a necessity. Now, shifting gears to the realm of ETFs, the potential absence of an Ethereum ETF opens up avenues for other altcoins to shine. Speculation about an XRP ETF gaining traction fuels excitement in the community. Diversification is key, mirroring the early days of the stock market where spreading risk was paramount. It's not just about one asset, it's about building a well-rounded portfolio. The journey towards an XRP ETF might be fraught with obstacles, reminiscent of the struggles faced in getting the Bitcoin ETF approved. It took the courts exerting pressure for the SEC to budge, revealing a regulatory tug-of-war that impacts the entire crypto market's safety and resilience. As for discussions with major players like BlackRock regarding potential ETF ventures, lips remain sealed. While Ripple sees the inevitability of multiple ETFs diversifying the market, the intricacies of negotiations and partnerships are kept under wraps. Looking beyond legal battles and regulatory hurdles, the crypto space continues to evolve. Collaborations between platforms like Injective and Solana herald new possibilities, enhancing user experiences and bridging ecosystems. The launch of the first ever omnichain domain name service signifies a step towards unification, empowering users to navigate and utilize both platforms seamlessly. The integration of Sol domains onto Injective, along with Solana's most popular wallet, marks a significant milestone in bridging ecosystems within the blockchain space. Now, this cross-chain name service is a groundbreaking innovation, showcasing the industry's ongoing quest for interoperability and seamless user experiences. It's a testament to the collaborative spirit driving technological advancements in the crypto sphere. Shifting gears to Ethereum's Layer 2 solutions, Cody Network's achievement in delivering garbled circuitry represents a monumental technical breakthrough. Vitalik's initial mention of this concept on Hacker Moon laid the groundwork for what is now a game-changing innovation. Positioned as a privacy-centric Ethereum Layer 2 solution, Cody Network offers lightning-fast speeds and significantly reduced storage requirements. The introduction of garbled circuits on the blockchain signifies a paradigm shift, unlocking unprecedented levels of computation speed, lower latency, and reduced storage needs. On a different note, the NFT market has seen its fair share of ups and downs, as noted by famous DJ Steve Aoki. While acknowledging the recent turbulence in the market, Aoki remains optimistic about the long-term potential of NFTs and blockchain technology. Despite the current challenges, he believes that blockchain technology, with its inherent transparency and security, will play a pivotal role in shaping the future of transactions. The decentralized nature of blockchain offers a robust foundation for various applications, including NFTs, paving the way for new avenues of creativity, ownership, and value exchange. Comparing Bitcoin to the likes of Apple, Google, and Microsoft, all giants in their own right, highlights the magnitude of Bitcoin's emergence as a trillion-dollar asset class. What sets Bitcoin apart is its intrinsic nature as an asset class itself, rather than being tied to the fortunes of a single company. This distinction is crucial, especially when considering Bitcoin's potential to absorb massive amounts of capital as a store of value. Bitcoin's competition isn't limited to traditional assets like gold or real estate. It's also up against indices like the S&P 500. Its superiority lies in its technical prowess, its decentralized nature, and its resistance to censorship. The idea of selling the winner to buy the losers seems counterintuitive when you consider Bitcoin's unmatched potential. This conviction is shared by many in the crypto community, reinforcing the belief in Bitcoin's resilience and long-term viability. As we continue on this journey of exploration and discovery in the crypto space, it's clear that Bitcoin isn't just another investment. It's a beacon of hope, a symbol of empowerment, and a testament to the transformative potential of decentralized finance. So, let's embrace the future of finance together, one Bitcoin at a time. Thanks for watching this video. I hope you liked it. Have a good day.